Welcome to the Dakota Housing Network. Joe Sheehan,
Dave Floor,
flying by the seat of my pants.
Yeah.
Now if I only had pants.
Yeah, you're looking rather resplendent today, though, in your purple and black.
Resplendent.
Resplendent.
Oh,
There's
that's
a new
awesome.
word. I learned a new word this weekend.
That is yes we do. Well, we have our dictionary homework, don't we?
Yeah. You
So-
know, I found something out
What'd you find out?
today. The Joe-mobile is literally the Joe-mobile.
It really is the Joe Mobile.
And that is where Joe does his work.
I do. I am probably I'm moving all over the state.
So you
all
just-
the time.
No office anymore.
I have a home office.
In the Joe-mobile.
Yep, the Cornerstone Bank head of the department is my address and
Cool.
my truck. It's my cell phone number.
You're busy. Well, you're out there in search of the lowest rates.
It's 1-800-JOE-MOBILE.
Yeah. Did you find the lowest rates last week when you weren't here?
You know what? I didn't. But here's what happened. Dave, didn't the Fed raise interest rates?
Yeah, in December.
Yeah, and so are interest rates now higher or lower than when the Fed?
They are shooting for the lowest of all time.
They are currently they are at 1 year price highs in terms of the bond market, which means the interest rates are at 1 year price lows.
Yes.
The current price of the Fannie Mae 3.5 bond is 105.09. The entire U.S. bond market, including mortgage bonds and treasuries, are higher, which means rates are lower, but well off their best levels. Take note that there is a disconnect between what is happening in the treasury market as the 10-year note is up nearly 100 basis points versus the modest gains in the mortgage bonds. And the treasury bond affects variable rates, folks.
Yep.
So if you have an ARM or adjustable rate of some sort, then that's what the treasury affects versus the mortgage bonds. We're talking about the 30 and the 15-year fixed. The European bank shares got crushed overnight, triggering a global sell-off in stocks and prompting investors from around the world to rush into the safe haven of U.S. government securities and gold, which is why you have the disparity. U.S. stocks are also pressured lower. They're down, 300 points at the open or something like that, or headed for that.
Yep.
Pressured after the Fed chair, Yellen, said yesterday that weakness in the global economy and risk from China could weigh on the outlook of U.S. growth, economic activity, and the labor market. After getting grilled by the House yesterday, Mrs. Yellen will be back on Capitol Hill today, but this time in front of the Senate Banking Committee at 10 a.m. Eastern Time. She may try to calm the markets, so stay tuned.
She's got power.
Remember, it smells like Team Spirit?
Yeah.
Smells like recession?
That would be Nirvana.
Yeah, it smells like recession.
Yeah. Janet Yellen's got power, though. She shows up in the halls of Congress and rates go down.
Do you think they marinate her before they grill her?
Ooh.
I appreciate the picture you try to, but why do you, if you're the was it Senate Finance Committee?
Senate
was it?
Banking Committee
Banking
today.
Committee?
Yeah.
What are you grilling the Fed chair over?
Why?
What are you grilling her for?
Why bother?
What has she done?
Yeah.
What? Did you wake up this morning and blink like Samantha Stevenson and make this a bad market?
Yeah.
You did, didn't you, Mrs. Young?
She did.
What? I mean, what?
They're
the
like
Fed,
Mrs. Kravitz from across the street, always looking out their window.
Did you fold your arms and nod your head?
Yeah.
Causing the stock market to go down. What is the Fed doing except for pleading for massive and much needed policy reform
done by Congress?
She Congress.
She should be grilling them.
Yes, I do. I want Arnold Schwarzenegger or Stone Cold Steve Austin or even Donald Trump would be great just for the day as the Fed.
Yeah.
You think you guys can tell me? You think you can tell me? I probably have had more interest rates than any of you people. And,
you know who I want?
Who?
Barney Fife.
I say this calls for action, and now, nip it in the bud.
Nip it in the bud.
Barney Fife.
And speaking of that, something hilarious today when I was watching MSNBC. I haven't even finished the mortgage market. This is almost comical to me that the Senate Banking Committee is grilling the Fed. Yeah. For what?
It is. There's no purpose, I don't think.
Grill her for what?
Other than they get on the news. That's basically about it.
because they're the ones who haven't done anything.
Her and Bernanke and the rest of the Fed governors have just been they have a couple tools.
They should
that
roll.
They can use.
You know what? All the former Feds and the Fed committee should roll in bandanas, tattoos, wife beaters, ripped jeans.
I want to see that.
And sunglasses, and they should flip the script on Congress.
I'd like to see that.
You're exactly right. They should be grilling them.
Yeah, they should.
The Fed should say, you know what? Enough out of you.
Yeah.
Enough out of you. I'm tired of these questions. You know what? When are you guys going to do?
I think this situation absolutely requires a really futile and stupid gesture be done on somebody's part.
We're just the guys to do it.
That's exactly right. So
when the Germans bombed Pearl Harbor, did somebody do something? Yeah.
Yeah, when the Germans bombed.
Don't stop him. He's rolling.
He's on a roll. From Animal House, folks, in case you didn't catch that.
So weekly initial. Hold on. I can't.
Okay,
there we go. All right. So weekly initial jobless claims, but I don't know. Who cares?
Who cares?
Bottom line is rates are really good.
We want to
the
see
market's in the tank.
We want
to smell recession. So I'm listening to MSNBC. And sure enough, what is the reporter from the Wall Street floor doing the economic update at 7:45 say today?
I don't know. What does she say?
The reason why the markets are so nervous, and the reason why that there's all this fear, is because the central banks have lost their power, and the markets believe they're out of bullets. Where's my Barney Fife cue?
Yeah.
I say this calls for action, and now, nip it in the bud.
Get your bullet out, Barney.
How long have we been saying?
We talked about with Barney Fife.
We have been talking about how the central banks have become Barney Fife. If they don't get interest rates up, if they don't raise their interest rates, coming up against recession, they only have one bullet in the gun, and that is to spend money to do stimulus.
Exactly.
And so quantitative easing
is coming back.
Quantitative easing,
it could come back,
is the only bullet they have if they are at negative interest rates in Japan. Are you kidding me?
Yeah.
They are Barney Fife.
Yeah.
They are Barney Fife, but the Hell's Angels have come to town.
We'll talk about this. Our buddy John Malden, Mr. Economic Guru, he's talking about interest rates in his latest weekly blog. So we'll talk about that when we come back.
I want somebody or Saturday Night Live to do the skit with the Fed as Barney Fife when the Hell's Angels come to town.
Here we go. Don't Back Down by Tom Petty. That should be Janet Yellen's theme song.
She should stand up, walk up, kick all of them in the shins.
Right now, 21.
Dave Ramsey is heard here. Super Talk 1270.
Well, you heard it here, folks, first. We've been talking forever about how, at what point is the fact that the Fed does not have a full arsenal to fight a recession going to come back and bite everybody in the butt. And, of course, it seems like the choppers are out because the market's reacting to the idea that the central banks of the world don't have enough bullets to fight a recession if it comes on board. And that's the response to the market today.
And here's a guy that I think we both agree would be much smarter than either one of us. John Malden.
John Malden.
Okay, he feeds right into this, Joe. He says his analysis about negative interest rate policies he sees them proliferating even further. Central bankers fear deflation, especially in leveraged and debt-ridden economies. That would be ours.
Everyone,
including us. John says, I like to quip that when you become a member of the Federal Reserve, you're taken into the back room and given a DNA exchange, which makes you genetically opposed to any form of deflation. You become a deflation-fighting machine. And John says he thinks the Fed's fought this pretty well for a long time, but the tools they now have, the bullets, are far more limited in their effectiveness. The more I think about it and the more people I talk to, the more I'm convinced that we are going to see negative interest rates in the U.S., driven in part by this self-reinforcing downward spiral that has to do with oil and everything across the world.
In other words, we have to push liquidity to I mean, I remember growing up as a kid, and I remember overhearing the adult conversations about inflation.
Mm-hmm.
You know, inflation this and inflation that.
Yeah.
Inflation
Well, it was
this,
bad.
Inflation that. Inflation
80s.
this.
Yeah.
Inflation that.
Yeah.
And so and I remember going to college, and I remember the big concern anytime you heard somebody talk about economics was inflation. You got inflation. You know, you got and I remember it being a part of presidential debates.
Got to nip it in the bud, as Barney said.
I remember it being a part of presidential debates, and we
goes back to Reagan, I think, especially the conservatives, the fiscal conservatives, have always seemed to almost make a fetish out of stopping inflation at all costs.
Yeah.
Yep. And now you have a world that may need inflation.
Yeah.
Like it's going out of style. Like it's your long lost buddy.
Like we're just saying here, we can't. Eventually, you run out of these bullets and the tools, and you can't fight deflation anymore. That's not good.
We need inflation. We're going to do everything we can to inflate the economy. I mean, it's amazing.
Yeah.
I mean, it's like you have a world right now, literally a world, trying to create inflation.
Yeah, and we,
they're failing.
Very difficult.
And they're failing.
Yeah. No, I want to bring it also in John Malden's his newsletter this week. His title of it was $100 trillion up in smoke, and what he was talking about was the oil wealth. In mid-2014, crude oil prices were $100. We all remember that because we were going gangbusters here, right?
Housing shortages, the whole bit.
Yada, yada, yeah. Teachers, firefighters, police officers.
Shortage.
People. Shortage of everything. Now we're down to $30. I think this morning the WTI oil is at like $26.80, so it's below $27. But with prices around, at the time you looked at these numbers, they were about $30. That's a 70% decline in 18 months. Well, they looked at what's the reserves, known reserves of oil in the world. Mm-hmm. 1.700 billion barrels. Okay, so that's like 1.7 trillion barrels of oil, right? The total value.
So instead of a chicken in every pot, it's a barrel in every home.
Yeah. Basically, the total value of all the world's oil reserves is over $100 trillion less than it was a year and a half ago. So you think about if you're an investor and you're a company and you owned oil reserves. Now you didn't price that at $100 a barrel, when you're looking at it, but you had some wealth there. You figured, well, you just lost all those people, and it includes us because we're probably through a mutual fund. Mm-hmm. We're probably invested in some oil companies somewhere
that own reserves,
that own oil reserves. That wealth is $100 trillion less than it was a year and a half ago. Now, put this into perspective. Google and Apple last week they're the two largest publicly traded companies, right? They were both worth around $500 billion into each of them. Okay,
so altogether they're 1T.
They're 1T. Okay, the lost value in crude oil is equivalent to a couple of hundred Googles and Apples going under. So that's how big that is, wealth. And what Malden goes on to say is that translates into people not feeling as wealthy as they thought they were. So they spend less, they do less, and he equates it back.
And you start feeling what?
Yeah, I'm not going to spend my money. And what he equated it back to was something as simple as this. And he said, I didn't realize it at the time, but when you go back and look, it makes perfect sense. In 2009, when we had the financial issues, there was a spike in lawnmower sales across the country. And he said the reason was people who were feeling quite wealthy at the time, in 2008, et cetera, had yard services.
They
went out. They stopped their yard service and went out and bought lawnmowers. Mm-hmm. You save money over time. Mm-hmm. You'd save money. So he said that's what we're facing right now is that effect.
Well, you
on
look
a much larger scale.
You look at the other side of it. I think the U.S. economy now is approaching 17 trillion, around 17 trillion. Yeah. So 17 trillion. That's the U.S. economy. The GDP is
17 trillion. Yeah.
17 trillion. That's the U.S. economy, the largest economy in the world. The economy that China would have to grow at double digits, currently only growing single digits, low single digits now, but would have to grow double digits for more than a decade to get close to us.
To catch up to us, yeah.
All of Europe
Yeah.
is not the U.S. economy, I don't think. Well, maybe all of Europe if you counted, I'm sorry, if you also counted Russia, but
Yeah, but
maybe. But
the euro, let's put the European zone.
Yep.
Put it that.
Not.
Yeah. Yeah.
So you $17 trillion GDP versus $100 trillion.
Yeah.
I mean, think about that. The largest economy in the world would have to be times 10.
8.
Or 8. Yeah.
6.
Yeah.
Six.
6. I'm sorry,
Six.
because 17. Yeah.
6.
6.
Yeah.
To get. So it's 6
To
times
get
the
to the
loss
wealth
that was lost.
That was lost in the oil reserve.
And oil
wealth.
reserves.
Yeah.
So you have to take our economy 6 times over.
Yeah.
Right.
Yeah.
Wow. And you think about the stimulus that we spent. The stimulus was $2 trillion.
Yeah.
Back in the first.
Yeah, it was, right?
I mean, yeah. It was the first time I'd ever seen the number actually printed, like with all the real zeros and everything.
Yeah.
And in public, like on a public newspaper, you know, it's like.
You know, and the other thing with this too, I think, is the dollar is the reserve currency of the world, and it's gaining strength against everything else. Well, that makes it very hard for our companies in this country that are trying to sell globally from being able to do that.
Mm-hmm.
So that has the effect.
So even though we've lifted the ban,
with
the price is
like
higher.
with oil,
the price is higher.
Yeah. So
for other countries to buy it from us.
Yeah, so that makes it difficult for our companies to sell globally and compete.
Mm-hmm.
So that adds to that spiral that Malden is talking about that you can't get out of. And how do you create inflation in something like that?
See, this is where you know, Jim, what can we do about getting a big budget here to because we
he laughs.
This is where two dumb guys can really rock something like this because you know we can't do this justice on the level of like
What is your major malfunction, numbnuts?
we can't do near enough justice at this with like, for example, like a CNBC is going to do. But you know what we could do?
What?
We could do a Scooby parody on energy. Zoinks!
Zoinks,
yeah. That would be...
Jinkies!
Jinkies.
Yeah.
Jinkies. It looks like we've got a lot of oil here, Fred.
Yeah. Jinkies.
Zoinks! It looks like we're going to be able to drive all the way to California for that mystery scoop.
Oh, boy, you do good. You're a good Fred. There's that Fred. No, Shaggy. That's Shaggy.
Yeah. Oh, no. Scooby Snack.
Scooby Snack, yep.
So
Scooby Snacks.
We could do the whole oil crisis with the what do they call themselves all together? I know it's the mystery.
The mystery machine.
The mystery machine.
Yeah.
Traveling because with the lower price of oil, the mysteries are getting solved.
Yeah.
They drive the mystery machine all over.
You can travel around the country.
Oh, zoinks.
Yeah. So anyway, what else do we want to do?
The mystery of the vanishing oil wealth.
There we go. There we go. We can solve that. Jim, we need a bigger budget.
We need a bigger budget. This is all two dumb guys can do.
Yeah. This dude's really silly stuff.
Barney Fife in the episode where the Hells Angels come to town and he's got one bullet.
Yeah. Okay, Jim, how much time we got?
We got about 2 minutes.
Okay, well, let's do some by the numbers. How's that?
All right.
We can end on that. All right. Well, here we go. The top 10% of taxpayers in 2013 earned at least $127,695 in adjusted gross income, and they paid 69.8% of all federal income tax. Okay. I don't know what that means, but top 10% are paying most of the income tax. Okay. The top 1% of U.S. taxpayers pay an average tax rate of 27.08% in 2013 versus an average tax rate of 3.3% for the bottom 50% of taxpayers. If you look at that, are we overtaxed in this country?
Oh, gosh.
I don't know. You know, we all feel like we are, right? I think, but boy, you look at those numbers and I don't know.
No, you know, I don't think it's we're overtaxed. I think it's kind of like one of those things where you go to a great restaurant or you go to a restaurant that's supposed to be great.
Yeah.
And it winds up being that the ribeye isn't any better than the ground round, but you paid 4 times more for it.
Yeah.
And,
Yeah.
And that's the problem is that we pay more on education than everybody else. We pay more per pupil. We pay, and so what happened is we spend all this money, but our bridges are crumbling.
We don't
and I
see
think
what we got for it. Yeah,
it's the infrastructure issues. We're not getting what our value, the money we're sending out.
Exactly. All right, we'll be back on the Dakota Housing Network.
We get something, we both know it. We don't talk too much about it.
Right now, 21.
News headlines and weather together. Live on Super Talk 1270.
Do you think that's what Janet Yellen is saying when she's testifying? Don't do me like that.
Don't do me like that.
I'll do you like that.
You know, I mean, and you go back to Bernanke's speeches early on in their session, and he's all but on bended knee begging for financial policy reform.
Yeah, he was.
I mean, he was just like, this is all I can do. I mean, he was just like, all I can do is mess with the interest rates. I can spend money out of the, I can basically spend ghost money and buy stuff with no real money. And I can put money on the Fed books to create money in the market, or create the feel of money in the market. Yeah. Really is what it is.
Anyway. Well, hey.
So anyway,
we're going to provide some real mortgage information right now in this segment, huh?
Information.
Okay.
Hey,
so what do we got?
Bad news: renters are not saving for down payment, says Freddie.
Well, it's hard. It's hard.
Despite recent concerns that renters can't afford to buy a house because of the steep cost of a down payment, a new Freddie Mac report suggests renters aren't interested in home buying. According to Freddie Mac's survey, 66% of renters carry debt each month, and 56% of renters are optimistic about managing their debt. Renters also are saving money, but not for a down payment on a home. Rather, they are saving for other priorities like major purchase or a vacation. We know rents are rising faster than incomes. Now we have data to show that many renters don't have enough to pay all their debts each month, which is forcing them to make trade-offs such as cutting spending on other items, which obviously is home buying. Executive Vice President of Multifamily said in a news release. Renters are also planning for their monthly lease payments to rise and are setting aside money for that.
It's an interesting question. My wife and I and my daughter, we were talking about this, about vacations. And my wife said, she remembers growing up from Dickinson. And she remembers one family vacation in the summer growing up. They went to Arizona to see family down there.
And they drove.
And they drove in a car with no air conditioning through the desert, all that good stuff, okay? Yeah, but that, of course, was when you could lay in the back seat with no seat belt and you could go in the back window and all that stuff. But one vacation, the other vacations were her dad and her brother Boy Scouts. So they'd go on a 2-week Boy Scout thing, and that was their vacation, and then her mom and her were home with themselves. She said one family vacation growing up. Now, these days, when they say, well, we're saving for other things like vacations, is that part of the instant gratification of our world now? Well, I'm gonna take a vacation now because I deserve it. Where back then you didn't even think about it. No, we can't do that.
Right.
We got to have a house.
Right. We got to have a house.
Yeah.
Well,
but it is hard to save also when you have to pay $1,500 a month for rent.
Right. But here's what I really hope, and the reason why I brought that article up is I hope that if there are renters out there, if you know people who are renting, this would be the message I would pass on to them from a couple guys that work in the business, is not to miss the opportunity to buy a home because you think without knowing.
Yeah.
I think that's too expensive, and I think that's outside my realm. So I'm going to focus on these other things. Because what's the minimum investment with your program to buy a home?
$500.
$500.
Yep.
So, and right now, with interest rates as low as they are, you may very well be able to buy a home for the same price you're renting, or dang close.
You're going to be very close.
I mean, and we're gonna. One of the things I'd like to do, my sister's in the process of home buying, and she's agreed to actually come on the air and talk about what the process was like and what she learned about buying a home. And she's been a renter for a long time.
Cool.
And you look at when she really breaks down what she's paying, and now she's got an association that covers outside water, outside maintenance, and all this stuff. For sure, per square foot, I don't know that it's going up that much on her.
Yeah.
For sure, per square foot, it's not.
Yeah.
And Now, is the overall price maybe? It might be. But when you look at what she might save and other things that she's currently paying for, just even the way that she restructured her budget, she's really good at that. I mean, she's in housing. She manages housing for BSC.
Okay.
So one of the things she's good at budgets and stuff like that. So she started reevaluating some of the other bills she's got.
Mm-hmm.
Like, do I need cable? No, I need HBO Go. I don't need cable. I need HBO Go. That's what I really need. So she started looking at what her usage was on other things, and all of a sudden she's saving money on other things. And by the time that she recalibrates and reevaluates her whole lifestyle and gets done with this, I don't know if this is going to cost her more.
Yeah.
But she's going to have a much nicer lifestyle.
So it's a good.
With interest rates where they're at, folks, anybody who thinks they would ever want to own a home, ever, should evaluate it now.
Yeah.
They just should. I'm not saying they should do it. But that's why I brought up the articles, because I think
evaluate.
And with things like in North Dakota, where you have programs like this, the down payment assistance program, where $500 if you can qualify for it. I'm not saying everybody gets that.
No, it's not.
But it's an option. You should see if
That's
you should see.
And you've got rural development if you want to live out in Lincoln. You got rural development guaranteed loan at 100% down or 100% financing. There's options.
Yeah, USDA. So parts of Mandan, parts of Lincoln,
anything outside the
zero down,
Yeah.
Zero.
Yeah.
And if you were served in our armed forces,
VA?
That's the best loan on the planet, the VA loan. Yeah. If you've served in the armed forces and qualify for the VA loan, you absolutely have to look at owning a home.
Yeah.
I mean, as an option. Yeah. Just not that you have to do it, but you have to look at it.
Yeah.
It's just
okay. What else? You had condos.
Oh yeah,
change in condos, right?
Big changes in FHA condos coming. One of the struggles out there, folks, has been the marketability of condos because there's all these ratio requirements on condos. What does that mean? Okay, it means so if you have a 4-unit condo complex, but if 2 of them are rented out, you all of a sudden didn't qualify for FHA financing, and so. The problem with that is that eliminates all the borrowers who need to use the Federal Housing Administration's program, which in my portfolio of loans in North Dakota, I bet's 50%. I bet 50% of our customers use what's the percentage you service?
Right now, 50% is FHA.
Okay, so our balance of loans pretty much reflects your housing balance, and we have a lot of first-time home buyers at Cornerstone Bank. Yeah. So, so you look at that and you look at how many are doing FHA. So that takes potentially, if your condo is in that affordable housing range, somewhere under $270,000 in the sale price, if you can't qualify that condo for FHA financing, it eliminates 50% of your buyers.
Yeah.
Well, if you eliminate 50% of the people who can compete, potentially for that, it lowers your price.
It just shrinks your market.
It shrinks your value.
Yeah.
And so this is a big deal. And so what they've done is they've raised the ratios. I guess do you know exactly? I mean, I know they've changed all these ratio requirements.
I can't think of the numbers off the top of my head, but it's made it easier to qualify to qualify the condo association.
Right.
One thing, condo associations also, if you're in a condo association, if you've got it in your bylaws that these units can't be rented out or something, don't start giving that up. Because that leads to these problems where your market of eligible buyers starts shrinking as you make amendments to your bylaws and stuff that make it easier for people to rent or whatever. So
right, and you don't have to write you don't have to write that they can't be rented. You just have to write that they can't be rented without association approval.
Right.
Because certainly you don't want a foreclosed condo
you don't.
in your association either. That lowers your market. Right. You just want to be smart about evaluating this. Yeah. And so, for example, let's say you have a 4-unit condo, just because that's a little more common around here. And you have a 4-unit condo, and one of them, the buyer, for whatever reason, loses their job. And they come to the association. Well, if that's the only rental you've got in that unit, you're fine. Yeah. And so you could prove that one to be rented. That would be a better solution than letting it go into foreclosure and be empty. Yeah. Certainly, then if you wanted to sell your condo that year too, and you're next door to the one that's foreclosed on, that's not going to be a good sign.
Yeah.
It's going to negatively affect your particular property. So,
So anyway, so it's something to look at again because the rules have changed a little bit. They're getting a little friendlier because condos, FHA, Fannie Mae, Freddie Mac all realize that the investors in these loans have realized that condos are an affordable option for many people, and that's the only.
What a great lifestyle option too. You know,
It can be, yeah.
I mean, there's a lot of great things about condos where you get your, the exterior maintenance, there's all that
Lawn
kind of stuff
care,
can be taken care
shovels,
of. Yep.
shoveling, all that good stuff. So
There's a lot of value of combining people together, and especially if you have health issues or just you're busy, you don't have time. Like if you're on the road a lot and you don't have time for your lawn care to buy that lawnmower, you can't afford your lawn service anymore, and you can't afford and you don't have time to use the lawnmower.
Yeah.
Well, maybe condo is an option for you.
But at least in the condo, you're sharing the cost of that lawn service.
Exactly.
Yeah. Okay.
No, that's a good one. So
Okay, what else? What else? Do we have
what else?
Mortgage related?
Yeah.
I can talk about Flint, Michigan.
Frank Dodd
Okay.
is costing banks, but we don't know how much.
We just go with a lot.
Yeah, so they're expected to have an economic impact of at least $100 million annually. It concluded that the 2010 reform legislation is hitting financial institutions' bottom line in the form of higher expenses and foregone revenues, but it's still too early to say exactly how much.
See, they're another shrinking of wealth right there in the banking industry. They're $100 million less wealthy than they were before.
Where are you losing this money at in your local banks? This included increases in staff, training, and time allocation for regulatory compliance and updates to compliance systems, the GAO said. Some of these industry officials also reported a decline in specific business activities, such as loans that are not qualified mortgages, due to fear of litigation or not being able to sell those loans to the secondary market.
Yeah. And are loans safer, more consumer friendly than they were before? I think that's going to be up for debate at the moment anyway.
And the national credit, the NCUA, the credit unions, they agree with the assessment on banks. And so bottom line is we don't even know yet. Your bank doesn't. Here's the problem. Your banks don't even know what to charge you. In 2016, on 2010 legislation, the banks still aren't sure what to charge you for what the cost of this is.
We'll be back. Last segment on Dakota Housing Network.
Right now, 23 degrees.
The home for ABC News at the top of the hour is Super Talk 1270.
And we are back. Tom Petty in it.
Running down the dream.
We are running down the dream.
Here on Super Talk 1270. Dave Floor.
Joe Sheehan.
Jim Walsh. Oh. Okay. Joe, you were talking about how much Frank Dodd is costing banks. And
banks don't even know. The banks don't even know what to charge you yet for the cost.
One thing is
the new regulations.
You got to hire compliance people, right? Banks got to hire.
Not only do you have to hire them, but they better be good at their job.
They better be good. Okay, well, here's how many big banks. We'll talk about a couple of big places. J.P. Morgan Chase, probably one of the top 4 banks in the country.
Oh,
top 4 banks in the world, maybe even top 5.
When your bank is run by a guy named Diamond.
Yeah, there you go. they've just in April.
Wasn't Lehman run by? Wasn't Sterling? Wasn't it Sterling who was in charge of Lehman? No.
I don't know.
It'd just be fun. It's just hilarious.
Funny,
they all had jewel names.
They added this past year. They added 8,000 compliance employees. Goldman Sachs, they increased their headcount by 8%. So these guys are hiring people anyway. That's good.
Mm-hmm.
By 36,800 in 2015, and the main area of growth was compliance.
Here's the problem with that. Before you move on, here's the problem with that. It's like saying I can stop crime by hiring everybody as a police officer. So we just go out and we say, okay, here's how we stop crime. You're all hired as police officers.
You could go to the gangs like in L.A. or whatever. Go to the gangs, say, you know what?
You're all
we'll
deputized.
Hire you guys.
Yes, you're all deputized.
Yeah.
So we're gonna, and I'm not. Now make sure you're not drawing the comparison. I'm not saying you have to have a clean. Your background has to be clean as a whistle to be a compliance officer.
Yeah.
I'm not saying that. I'm just saying that the idea is that you can increase the compliance so much where, like, I have more people in support and operations now than I have people serving customers.
Yeah. Okay.
So that's what.
Well, it could potentially start getting tougher. Several recent enforcement actions have found compliance officers personally liable for mistakes within their firms. And New York's principal financial regulator, also backed by New York Governor Andrew Cuomo, wants the power to seek criminal charges against compliance officers in some cases. So what does that do? I would say that would make the compliance officers very nervous. So they are only going to become tougher. Well, and anything that has a little hint of a odor to it, they're going to say, you can't do that. You can't do that, even though it's a good deal.
This is like putting the janitor in charge of the business. Okay, so let's say you go to the janitor of a restaurant.
Yeah. And
you put the janitor in charge of the restaurant. What kind of cooking is going to happen in this restaurant?
Not much. It might be clean.
Yeah. Well, no, that's too messy.
Yeah.
Oh, wait a minute. That's going to cause a splatter.
Yeah. Yeah.
No, wait a minute.
I have to clean that up.
No, yeah. If I got to clean that up, no way.
You're not putting it on the grill.
Are you kidding me?
Yeah.
How this would be like making the brakes the fundamental function in a car.
Yeah.
Everything revolves around the brakes. Yeah, it's all about letting off the brake. The brakes are permanently the brakes are continuously engaged.
Yeah.
And you're driving around your brake control.
Yeah. Yeah. So anyway, that came from
you know what resistance and this I just thought about this because in terms of like the coaching that we're doing with our team in terms of performance coaching that we have and the performance coaches we've hired. You know what resistance is for?
What?
It's a physics. It's the physics of breaking down energy.
Yes, it is.
So you take resistance, and what does resistance do? Resistance stops things and prevents energy from flowing.
Stops your car. Stops a loan.
So if you want to stop the flow of money to businesses and to people. Put compliance in charge of the banks.
Yeah.
And that's what you're saying you're going to do because who's going to take a job in compliance if you can go to jail?
Yeah, it's literally. If I do take that job, I am not letting anything splatter my kitchen.
Unless I have control of the kitchen, I'm not taking the job.
Yeah.
And right now, although compliance officers have a large degree of control, they're not in control. The credit committees and the CEOs and the president still decide what loans are done and how.
Yeah.
But the idea that prosecuting, you can always prosecute somebody for doing something wrong. If you have a compliance officer that is complicit in fraud, you prosecute them for fraud.
Yes.
You'd prosecute anybody for that. But just like specifically targeting somebody.
Yeah. Just because they're
of their position.
We're going to make sure they're doing their job right.
We're going to make laws that specifically help us prosecute compliance officers.
Yeah. So, some other stuff that's been in the news. Flint, Michigan. We all know there's trouble with the water, obviously, but now it's coming out. You're gonna have trouble getting a mortgage in Flint, Michigan. And
you mean water's important?
Will that lead into anything else nationally with in older neighborhoods of cities where they may have lead pipes? That could potentially contaminate water.
Oh God!
Well, already you have FHA, Fannie Mae, Freddie Mac, and all these investors buying loans. They're saying you want to get a mortgage in Flint, you're going to have to get your water tested. It's got to be potable water, safe environment, all that stuff. That could very easily lead to some national laws here, and that could be just like we have testing for lead paint, radon, even though that's not a requirement.
No, but you could certainly see where
it starts becoming one that where is that home hooked up to?
Really,
even if it's hooked up to the city water, could you see it coming down you need to have your home tested to make sure that there's not contaminants leaking in through your old pipes.
Really, wouldn't that really be though the job of the wouldn't that really be the job of the agencies? I mean, isn't that really the job of Ginnie, Freddie, Fannie, FHA?
Yeah.
From an agency perspective, get the EPA reports, require the cities to do something, and then
think so.
and then what they would do is just like they used to do the risk. But remember the declining market report? Hey, we got declining markets in Grand Rapids, Michigan. We're not buying loans from Grand Rapids, Michigan because we've identified it as a declining market.
Yeah.
Remember during the crash?
Yep.
Why wouldn't that be? And then they put out a report saying, hey, we're not buying
loans in Flint
because their city won't supply us with the report saying their water's safe. Yeah. I mean, really, shouldn't that be on the cities and the agencies to work that out versus putting that on banks and customers to prove that the water's safe?
You would hope so.
Jesus.
Yeah. But it's something to be.
Speaking of a guy who is pretty good with water, Jesus,
yeah. But it should be something to think about that this could, it's in Flint, Michigan. It's a big story. And it's a big deal. It's affecting a lot of people terribly, and there were some big mistakes made there.
It's crashing. Well, the city was crashed.
Yeah, because the auto, they were in terrible shape. But
this is like that. Flint is that city. Is to cities what like that friend is that you have that, like gets lupus, but then also gets cancer, but then also it's like he's just like, oh my God, and then broke their leg on top of it. After they were hit by a car, broadsided by a car in the intersection. By the way, I mean, just like it's like that friend who's like your tough like Charlie friend. I mean, Flint just cannot get a break.
No, they can't. And so, hopefully that this doesn't get blown out of too much proportion and starts affecting the rest of the country, and we have to have everything tested, et cetera. And
especially if we do that at the street level, we do that at the front lines. That'll be really tough.
It'll be very hard.
I mean, there's nothing. I mean, think about it. You got to have water to have
absolutely.
have a marketable community. Certainly, you get that. You don't want investors. You don't want stockholders of Fannie. You don't want Fannie's balance books to hit the skids because of a. Imagine if a city like San Francisco had a water problem.
Oh man!
Oh my God!
Yeah. Flint is 100,000 people.
Right.
You throw this into Detroit, I guess, would be the next one you could see something like that happening. But yeah. No,
they're not. They have the Rocket Mortgage.
They got
Detroit.
the Rocket Mortgage.
That's the home of Quicken Loans.
So Tuesday, Wednesday is the North Dakota Housing Finance Agency sponsored statewide housing conference. We're doing a little segment on credit scores. We've got some people from Radian and Arch MI coming in to do some work for lenders and realtors on selling in a purchase market and self-employed borrowers.
What about investors? Are you talking about the investment fund?
Housing incentive
fund.
That will also be a topic, I'm sure, on the multifamily development side.
Yeah, if you're somebody who's interested in that incentive fund, you might want to attend that.
Yep, see what's going to happen.
Or at least you could pin down, one of your folks to get all the details on it.
Yep. Okay. Next week on the Dakota Housing Network, it will be Mr. Brian Ritter. Will be
stuff is happening, and Brian's going to tell you what it is.
Brian's in the house. Thanks, everybody. Dave and Joe signing off.